Okay, can you guys hear me okay? Bloom plays here. Let's go. Yeah.
We can hear you.
Okay, let's move everyone into the right room. I think there's some people in general chat, some people in live lessons, some people in whatever. I could see them sitting there, waiting to miss out is what I'm seeing. Okay, so let's corral the people to go to Bloom Plays. Okay, Bloom Plays is the left and in live trading for boys, okay? All right, so let me go to Bloom Plays. All right, how's everyone? Rhetorical question. Good. Don't tell me. Mute yourself, please. At this point, this is week 4 of class 15. Everything should be routine now. As I start speaking, you should mute yourself, okay? That's just, and that's not because I don't care if you interrupt me, but if I lose my train of thought, you will miss out on what I'm about to say, all right? Okay, so let's do the mission and vision statement. No, let's do, actually, one sec. Stop Twitch, God. Give me 1 second here. I want to pull up the, where is the schedule? All right, doesn't matter. Okay, if someone can pull up and post the schedule as I speak, that would be good. I'll quickly go over. So we're moving into what I'm calling the buy signals. Okay, thanks, Ace. There we go. Okay, so we look, onboarding, support resistance, pattern breakout, and now indicators and moving averages. These 4 classes put together could give you now a strategy, okay? Like a technique to take an entry, all right? What are some of the rules? Just a quick reminder. Buy at support, buy over resistance, buy over the break of the pattern of sending triangle breakout, right? Today we're gonna learn the indicators and moving averages and the RSI. These are all together, the 4 of these, the first 4 weeks is called buy signals. Okay, these are buy signals. What does that mean? That means together you're going to form a strategy. Okay, let's mute. Okay, together we're going to form a strategy, right? Together you're going to be able to form a strategy that fits your personality, that fits you, what you understand, and fits what you know. And then this becomes your buy signal. Every time you see this setup, the moving average crossover, the indicator, the support resistance, the support is now validated with volume. Resistance is now broken. It doesn't matter what your strategy is. Now you can put together these buy signals for entry. So every time you see your buy signal, your setup, you could take entry. All right. So this week 4 will be the last of these buy signals introduction. Okay. I went over that. So I'm just going to, okay, so next week will be break. And then the following week after, so I think sometime in February, we'll do volume analysis. So this is the time you start to read the volume analysis, the volume price analysis book by Anna Cooling. We have that. And just so you know, volume price analysis is a term that Anna Cooling created for herself for this book. The general term in technical analysis is volume spread analysis, okay? So if you want supplement material for her work, go to YouTube and go volume spread analysis, all right? The word spread comes from the spread of the candles. Volume validates the spread of the candles analysis, okay? So if you need supplementary material, please go Google it, volume spread analysis. Because next week when we go through the 2 weeks, when we go through the volume price analysis, it will be critical because you know that I am a volume trader. All I know is volume. Okay, so that's that. So class, it might run over time. When I was doing my work today, I realized that there's actually a lot of material to cover here. So let's once we're in the zone, we'll just fly. Okay. Okay, let's go over the vision statement today. We went over the mission last week. Okay, so the mission of the United Trading Capital is deliver the highest quality of care and superior returns across all disciplines of the capital markets in a diligent and prudent manner to inspire the next generation of professional investors. The reason why I highlighted the word inspire the next generation of professional investors is because every day we're getting new membership. We're growing rapidly, as you know. If we don't mentor others, and if we're not role models for others, and we don't inspire others, and if we don't act professionally and with diligence, can we inspire others? That is the word, right? Inspire. All right. And since I have the floor, let's go over this really quick too, and then we'll go over the material, right? I won't go over. This is so here it is. This is part of the code of conduct, right? The key word here is we request all room members to respect one another always, okay? That's probably the most important statement in the code of conduct, is to respect one another always, okay? So it doesn't matter what we talk about on voice, as long as it's trade focused and we're having fun, and that's fine. I like to joke around, right? You know me, I like to joke around. I'm already going to China 8 times, right? I'm already going to shareholder meetings, right? But the word here, respect, and you will know right away when you cross the line and you disrespected another personality or another trader on voice, okay? And there's other things that you should not be doing there. So I won't cover that. Okay. Let's go into the material today. So let's talk about the moving averages really quick. Okay. I'll write it here. There's the 20. Okay. There's 3 kinds of, let's write these down. Can you type it as I speak or? Okay. All right. Okay. So let's talk about the moving averages first. There's 3 types in general, 3 types. There's the exponential, there's the simple moving average, and there's the weighted moving average. Okay, there's 3 types. Okay, just to be aware, you guys could go back to your desk at home and look them up and talk, right? But for now, who cares? For now, it doesn't really matter. Okay, so what really matters is here, the 3 out of the simple moving averages. Let's focus on that. The simple moving averages, there's 3 kinds that are used most widely: the 20-day, 20-day, the 50-day, and the 200. Okay, the 20-day simple moving average, the 50-day simple moving average, the 200-day simple moving average. Okay, and there's actually one more it's sort of in between. It's used but not widely used, is the 100-day simple moving average. Okay, so let's write this down here. This is really important. Okay, 20 is short term, right? 50 midterm, 200-day long term. Okay. Let's write this down. If you have notes, write this down. If the candles, if the price action is below the 20-day, what does that mean? If it's below the 20-day, meaning it is bearish, short term, right? You guys getting this? If it's above the 20-day, short term. If it's above the 20-day moving average, what is that? It's bullish, short term. Okay? Did I lose anyone here? Okay, let's jump to 200-day. If it's above the 200-day moving average, what is it? Bullish long term. If it's under the 200-day moving average, what is it? It's bearish long term. Does everybody get what I just said there? This is important in technical charting. Why? You can instantly look at a chart, right? I'm going to pull up a chart now. Okay. Let's see if these lines go away. I'm gonna focus on DEST from last week. Come on, does this load? Okay, so here's the chart. This is DEST, okay? This is the chart from last week. Those you have to memorize. You have no choice because you instantly can look at the chart and instantly know if this is bullish or bearish, long-term, short-term, or mid-term. If you can't point that out instantly, there's a problem with your charting. You don't know how technical charting works, okay? So that's one point. This is the DST chart. I'm going to clear away the support and resistance and that gray line for confluence. I will take them away, but take a look at the chart. We drew this. It was trading in congestion, right? Okay, so there was the point of entry. Look at the point of entry from last week. Did I make this up? No, that was the exact point of entry. You see how it bounced off of this on the daily and it moved, it's going upwards now, just like what we talked about. Okay, this is just a quick review here. Okay, I'm going to delete these lines because today is not about support and resistance. Today is about the moving averages, okay? So I'm going to take away these lines and really focus on these lines, okay? One sec here. Okay, first line. I'm planting the seed here right now, okay? Okay, what's going on here? That's the 200-day moving average. This is what? What's the answer? This stock is bearish long-term. Bearish, right? Right, but what is the psychology here? This is critical. I'm going to talk about the 200-day moving average, but this is critical, the psychology here. Okay? The moving averages are also known as what? Support, dynamic. Let's write this down. Dynamic, support, and resistance. Okay? This is important because we will go layer this concept later so that it will add value to your charting. Okay? Dynamic, support, and resistance. Right now, this 200-day moving average is what? It's considered dynamic resistance. We are now sitting under resistance. Why is that? Because the 200-day, also it's called length, right? These days here, it's called 250, 20. It's called lengths. So sometimes you will hear people say that. You'll hear people go, okay, let's use the shorter length moving average versus the longer length moving average. Okay, so then you'll know what they're talking about. They're talking about the days and the width. Okay, the time, the 250 and 20. Okay, let's talk about, because we know. Okay, so this is under 200-day moving as resistance. Why is it the 200-day moving average? They're now resistance. Just psychologically, why is it? Because for the last 200 days, people were buying the stock at the average price that people were buying it at was, so on the chart, just believe me, it was 275, okay? So the 200-day moving average was 275. There you go. There, 200-day moving average for GST was 275. So on average, people were buying at 275. Now that the price is under it, now what are they doing? If the price is now sitting under 275, they are bag holding. Does that make sense now? Is that kind of clear how what I'm trying to say here? This line is now resistance. There's bag holders here. Right? Okay. Let's talk about this red line here. I want to plant the seeds first before I drop the bomb here. This red line is this is the 50-day moving average. Just by looking at this, it's what? Just by looking at this, we know that it is in the midterm, it is also bearish. Right? You don't have to do any charting here to know that. This stock is still bearish. Okay? Okay. So here's a question I have to teach this. This sets me apart from everybody else. this line here. I'm gonna put it at number 2. Here's the question I'm gonna ask, and okay, you guys might not know the answer, but if you do, I will say who got the answer. That line is the, let me see what moving average it is, okay? That's the 9 EMA, okay? That's the exponential moving average with the 9-day length, okay? Okay, how is it possible that as time goes on, this is the question, as time goes on, the 9 EMA moves closer and closer and closer to the price action such that eventually it breaks over, such that no matter what happens in the future, it has to break over. Why? That is your question here. Because we watch the videos, right? I'm not going to go, you watch the moving average videos. Okay, so why is it that over time, these moving averages actually converge, right? Now we have a new word here. Remember what the MACD is. MACD is the moving average, convergence, and divergence, okay? Convergence, divergence. Okay, so nobody knows the answer, right? That's fine. Moving average, convergence, divergence. Okay, somebody put that. Okay, moving. Why is it that it is because people are lowering the average price down, because over time, as the stock tanks, people are buying at lower prices. If they buy at lower and lower and lower prices, the moving averages has to come closer and closer to the price action. Is that true? Is that true? What I just said that is true. So eventually, these moving averages have to eventually move towards the price action. It has to. There's a critical part of this. There's a reason why. Okay, here's the example I'm going to give you. Okay, this is really, really important, because when you see moving averages like this, you could go bang on. This is, and I'll show you examples where I will take the entry and know this is going to rip. Okay, and this is, okay, look, you buy a stock at $1. Say you buy a stock at $1, right? You buy the stock at $1. It tanks. It tanks to 50 cents. It tanks to 50 cents. Now you are the resistance at $1. All right? You average down. You buy more at 50 cents. The average, right? You buy more at 50 cents. You buy more at 50 cents. You keep buying at 50 cents and 50 cents. What are you doing to the moving averages? What are you doing to the moving averages? You're lowering the moving average, right? Are you not lowering it? You're lowering them. But here's the psychology behind it, okay? Let's say the moving average is now at 75. You've lowered your average. Where's resistance now? Where is resistance now? Is it $1? Where's your break-even price? It's not $1 anymore. It is 75 cents. Does that make sense? That's so critical. Why is that critical? Because let's go back to the moving average. Let's go back here. Let's pick. This is the 50. I'm just going to pick one. This is, okay, now I'm planting the seed, okay? I'm planting the seed. This pink line is what? The pink line is the 20-day moving average. DEST, it's the 20-day moving average is that pink line. What happens there when it breaks over? We know instantly the what? The people that has averaged down to that price level is now what? They've sold all of their shares. The selling pressure is gone. So when you cross over the moving average, what are you crossing over? Everybody who averaged down and everybody who bought at those levels are now what? The selling pressure is gone. That's why when you move over the moving averages like that, it's gone. It's ripping. Okay, do I need to take a step back to explain what I just explained there? Because not a lot of people can explain it that way. And it could get confusing. Did I lose anyone? Just say yes or do that check mark thing. So that pink line was the 20-day moving average. After we crossed over, bullish short term, right? Did I lose anyone? But you guys are understanding what I'm saying, right? So let's take, okay, Nani, are you serious? You don't, okay. I'll explain it one more time slowly. But the example is this. Say you bought a stock at $1, all right? You bought it at $1. The the stock starts to tank. Now you want to break even at $1. The stock keeps tanking. Okay, stock keeps tanking. Now it's at 50 cents. You average down. You keep averaging down. You average down. You average down. Right? You are moving the moving average down. Right? You're moving the moving average down because you're averaging down. People are buying. They're buying that average down. But your resistance, your break even is now what? What's your break even at? Your break even is not $1 anymore. Your break even becomes the moving average, right? Right? Because you're averaging down. This is called the moving average. Are you not, when you average down, you guys know what that means, right? When you buy more shares and your average price per share is now lower. So your break even is now something like 65 cents. Is that clear? It's now 65 cents. The moving average is, okay. All right. It's very confusing, that part. Very confusing, right? But what are we noticing here? Over time, look at what's happening here now. Look at here. I promise you, I will explain it to you quickly. Okay, look what's happening at number 1. On the left. When it first tanked, the moving average was far away, right? Tons of divergence between them because nobody has averaged down yet. Is that true? On number 1, the moving average is so far away. Remember that blue line is the 200-day moving average. What's happening now? Everyone has averaged down and bought so many shares that their resistance level is so close to the price action that break even is very close. Break even is very close to happening. They're like 5 cents away from break even. Does that make sense what I just said here? On number 1 in October, when it first gapped down, everybody was bag holding. They bought at lower prices. They bought at lower prices. They bought at lower prices to lower their averages, right? Such that now in January, the moving average is so close to their break even, such that when they wake up tomorrow, if the stock moves up 10 cents, they're break even. Is that fair? That's critical what I said there. That's essentially the moving average psychology there. Okay, I'm not gonna. I don't know. Did I lose anyone there? I'm sure I did. Okay, so that's good. Okay, so let's go to the chart. So why is it so? If we base it on that, DEST, look at this. See this area here? That's resistance, isn't it? Look at all those people bag holding there. Those are all the dynamic resistance. Those are all areas of resistance, right? All those people are bag holding there. I can look at the line and say there's bag holders there. This stock has to rip right through all those lines before it's bullish. Is that fair now? That's clear? What is happening here when I say it is dynamic resistance? Okay? That's important. This is important. Okay. Let's look at another time frame, the 1 hour. Okay, look at the 1 hour time frame. If we base it on that alone, this is the 20-day moving average. The green line is the 50-day moving average. Where does it cross over? Look, as it crosses over, what's happening? It's ripping through resistance. Is it possible to take your entry there? Superbloom, thanks for teaching me your class. I'm now a guy that trades over the 20-day moving average. When the stock breaks over the 20-day moving average, I want to buy because I know that the bag holders there are gone. They broke even. The selling pressure is gone. This is going up. Is that a good buy signal? Is that one, the left, the pink line is the 20-day and the green line on the right there, 50-day moving average? This is getting more bullish and bullish. If this crosses over, this is now bullish short-term and bullish mid-term. Okay? Wow. Okay, I'm spending a lot of time on this. I don't know why. Okay, and look at the volume coming through, okay? Just notice the volume, right? On those entry breaks. Okay, on those entry breaks, look at the volume come through, right? It is why the buyers are trying to break over, the people breaking even are trying to sell all the shares, and the people buying through are trying to absorb all the shares. There's a lot of price action there for the break. All right. Okay. All right. So that's that. So I'll just go over quickly one thing here. Okay, and I'll just go over this quickly. This is the 9 EMA. This is the 20 MA. Okay. You guys already know this from homework. I don't have to, that's why I'm not hammering. This is the 9 EMA crossing over the 20 MA. When it crosses over, it's what? It signals what? Momentum. A change of momentum. That's what you have to notice. When, put this down, when short length cross above longer moving average, right? Signals a change in momentum. That's what it signals, right? Okay, so this is the confusion in trading. It signals a change in momentum. It is not technically your buy signal. If you go around saying, hey guys, the 9 just crossed over the 20 or the 50 moving average just crossed over the 200 day, I'm going to take an entry. Trust me, the professional traders will laugh at you. This is just a signal of momentum. That's not an entry. That's not a buy signal. That is just one part of your strategy. Okay? I'm not going to hammer home that. You guys should know. This is the first thing you guys learn. Okay? This is the first thing people YouTube is like when something crosses over. This only signals a change in momentum, not a buy signal, not a strategy for entry. Because what happens if you enter here? I guess you could take it, but your entry is actually late. Okay, that's from the class, from the homework. Okay, let's look at this picture. The reason why this is not a buy signal is because it is. Okay, look. Okay. Oh, it's gonna get messy. Okay, look. Look at the picture I drew. My red arrow. That should be your entry, right? Like near support. That's your entry. The next blue line, the circle that I drew, the blue one, the blue circle, that's the signal of momentum. If you buy there, you're late. You're late to the party. Are you not late? Just think about what I just said there. You better buy at support, not go around buying stuff when things cross over. Like these are called confirmation indicators only, right? Okay, confirmation. You are behind me. You want to buy there? Go ahead. You'll make the price go up, and then as it goes up, I will dump it on you. Okay, so that's moving averages. Okay, that's the lesson on moving averages. There was a lot of homework on it. We talked about we talked about the psychology. We talked about the moving averages. Okay, now I'll go into. So there was 3 types of indicators. This is all you need to go and study this on your own. Don't think I have time. Leading indicator, lagging indicator, and confirming indicator. Okay, I never teach lagging indicators in this class. Someone write that. Superbloom never teaches lagging indicators. Everything I teach is leading. I want to know what's going to happen next. It's also it's like almost impossible to do it. But we teach price action. We can look at 2. We can look at one hammer. Remember, we can look at one hammer with volume. Remember last week? One hammer with volume. And we know our reversal might be coming. One hammer with volume. That's price action. The other one that we look at is divergence, which is what I'm going to teach next. And the other one is volume validation, right? What's the rule? Volume precedes price. Okay? So in these classes, I only teach leading indicators, not lagging. I'm not trading to lag behind you. No way. All right. So let's go straight into this. Oh yeah, here's a screener. Okay, look at the screener here that I set up. Look at this. Look at the middle. It's above the the price, it's above the 20-day simple moving average, the 50-day simple moving average, and the 200-day simple moving average. And look at the float, the short interest on it, over 20%. Look what's showing up, HTGM. Is this going to continue? Is this bullish? Who thinks this is bullish? Very, very, very bullish. It's sitting above all its moving averages. What does that mean? It is sitting above all resistance. There is no selling pressure up ahead. According to the moving averages, there is none. All right. Okay. So this chart is bullish. It will continue to be bullish. I don't have a position in it, and just for the sake of, so you guys don't go around and say, "Oh my God, I saw Superbloom do this, and I'm gonna buy it, and I'm gonna make a lot of money." Okay, I'm gonna draw the resistance here real quick. Just okay. Look at HTGM. It's at 390 today. Look, it's at 390 today. If it continues to attack the 440 line and continues to hug it, and if it rips over that, it's going. There's no resistance up there. None that I can see right now. Okay, so let's just wait for entry. Just don't go buy it, but we know from this chart, using the moving averages theory, it's bullish on every short-term, mid-term, long-term. Something big is coming for this chart, okay? Based on the moving averages. Okay, so that's that. Let's talk about RSI now. So you guys, I'm gonna do a lot of the material from here. Some things I want to talk about really quick is that the RSI is the most widely used indicator in the world, okay, on Earth, RSI. Okay, relative strength index. You guys know. You guys are familiar with it by now, and I want to point out one thing right here. That there are weaknesses and strengths. Oh yeah, I'm not even done it. I hate it when I feel like I'm behind schedule. Okay. Okay, let's look at this chart really quick so we know mentally and visually where we are. Today we went through moving averages, signal line. Okay, RSI is right here. Why am I teaching the RSI? Let's look at this really quick. Why am I teaching the RSI? Because it is a leading indicator. Okay, look at those lagging indicators, right? Follow this chart. Am I not right? I don't know what the market indicators are. That's something else. Okay, Fibonacci. So this is just a good guide, so you guys know where I'm teaching from. Okay. So if you go through the website I sent you later, you will learn two things that are really stand out. RSI, just like every oscillator, RSI is an oscillator. Okay, oscillator just means that this is only a good indicator in areas where it is trading, just to make life easier, trading sideways, congestion, consolidation, right? Accumulation, distribution. Why is it that all these have something in common? Because they all trade horizontally. This is what oscillation means. Mean reverting. Okay, it will trade sideways. Okay, let me look at it. This is important in RSI because it will tell you the charting. Let me see. Oh my God, what the? Right? This is what an oscillator does, right? It just goes between support and resistance, right? Right? Accumulation, distribution, consolidation, congestion, trading sideways, all of them trade in range. It's called range bound, okay? So that's important. You'll find that language in this website. One sec. Okay, so that's important. Okay, limitations of RSI first. Okay, limitations of RSI. Okay, there's a problem here with RSI. If the stock continues to move upwards, in upward trending markets, continuously moves upward every day, RSI will continue to show you that it is what? Overbought. Overbought every day, overbought every day, overbought every day. Is it overbought every day if it keeps moving up? No, this is why there's a limitation to RSI. So itself cannot be a buy signal. Is that clear what I just said there? RSI cannot by itself be a buy signal. If you say, guys, RSI is oversold here, it's tanked, and I'm just going to buy it, that is not the right way to trade. It is just one part of your strategy, one indicator, okay? When it is oversold, it is saying what? When it is oversold, what does that mean? It is an overreaction, right? People are overreacting. When it is overbought, it is what? It is also an overreaction, right? In an overreaction, prices need to come back. Okay, I think I lost some people there. That part was too technical, okay? Okay, but the critical part here before I go into bullish and bearish divergence was that when it is oversold, when RSI is oversold and overbought, it is not a buy signal. Got it? It is not for you to take an entry, because I will teach you why it is not for you to take an entry, okay? But it is a possibility, yes. When you become more professional, that's what we do in trading. When we knife catch and the RSI is oversold and the RSI is at something like 0.05 or something, or 5 or 10, it is so low that it has to come back because it is a overreaction. Does that make sense? RSI is between what? 0 and 100. Remember? You guys know RSI. I don't have to, okay? So here's what you guys need to know for that website when you guys look at it, is you guys need to read the limitations of RSI. You need to understand RSI better than everyone else trading it, because the world is trading RSI and they understand the divergence. And if you want to make money against them, you better know those strengths and weaknesses of the RSI, okay? And one of the weaknesses is what? In upward trending markets, it will give you false signals. In downward trending markets, it will give you false signals. It will keep telling you that it's oversold, but it's not, because this thing keeps tanking. All right? All right, so let's go into divergence here. I have 20 minutes to teach you divergence, maybe. Okay, so this is important here. I'm going to put this first for RSI, because you need to know the basics for RSI. RSI is working. This is when RSI is working. Look at the price action and look at the RSI. They are what? They are matching. Okay? I'm now slowly getting into divergence. They are matching. Look at this price action. Look at the arrows. They match each other. You guys agree? Right. Right? Okay, look at this chart, RSI. Okay, first part and first part. Okay, look at the two pictures here. Look at the red circle on the left and the red circle on the right. It's hitting the same area of resistance, but the RSI is actually decreasing. The relative strength is decreasing. What does that mean? The relative strength is decreasing. The momentum is decreasing. There's not a lot of the number of buyers that bought before are not coming back now, today, to buy. The momentum is decreasing. So what eventually break. If it didn't break last time with 1,000 traders and now there's only 950 traders, do you think that will break? Nah, this tanks. Is this what RSI is telling us? Yes, right. I'm leading you guys into divergence here. Okay, so here, what's happening here? RSI is only good in what? Look what I'm drawing here. Areas where it's what? Congestion, consolidation. It's trading sideways. Those areas are trading sideways. This is why RSI can work. Okay? Did I lose anyone there? That's important. That's just the weakness and strength of RSI. But that's not the class because you guys know RSI already. Relative Strength Index. Just for fun, you could go to YouTube and look up somebody calculating on Excel. Okay? And then you guys will understand why RSI is leading. That I will. Okay, so here, this is upward trending, right? Look at this. Look at what the RSI is telling us. RSI is telling us to sell, right? RSI is telling us to sell. Every time it's over that 70 line at RSI, look at the RSI line. That 70 line is overbought. It's telling us to sell. Is it? It's telling us to sell. Are we going to sell here? No, this is ripping. I'm not selling. I'm buying all the dips. So that's a weakness of RSI, okay? Okay, so that's it for RSI, just the intro. Now I'm going to the divergence stuff, okay? I will try to do it in 30 minutes. And I will try to do it in 30 minutes. Yes, applicable on every time frame. Okay, so there's two kinds of broad. Okay, who has never heard of the word divergence? Tell me now. Who has never heard of the word divergence? All right, because I know now you didn't do the homework. You guys didn't do the homework. Is that true? Because the homework talked about the divergence. Okay, now I know. All right. Okay, let me look up some charts here. Okay, let's just go through them. Let's just go too broad. Okay, what is the normal term? What is divergence? Okay, it is very easy. Maybe write this down so you remember. When price action and the indicator bracket unbracket oscillator. So in this case, we're going to use RSI, right? When the price action, the candlesticks and the price are moving in one direction and the indicator is moving in the other direction. If price is moving up and the indicator is moving down, there's something weird going on. Is that fair? There's something weird going on here. How can the price keep going up when the relative strength, the momentum keep going down? Is that even possible? It's possible. Price can go up. How is it price can go up? Let's just sit here and talk about that one sec. Price goes from $1 to $2 to $3. No, actually no. 101, 102, 103, 104, 105. But the indicator keeps dropping. 99, 98, 95, 94. How's that possible? Because the price is moving up slowly because a small group of people are buying it to move it up slowly, but there's not enough, what? Not enough buyers, right? Volume to validate the move. Validate the move. Okay, maybe I lost some people there. Okay, let's talk about it again. If the price goes up from $1 to 101, 102, 103, and you look at the volume, you look at the RSI and it's decreasing, you could check the volume and realize that only 5 people in a small chat room made this price go up 10%. Doesn't this happen in after hours? Some people are always like, wow, Is the price being manipulated, guys? They just went up 20% and there's only 2 shares. Yeah, that price isn't going to hold. Why? Because only 2 people bought it. Only 2 people. This is why the RSI will show weakness, why the price will start to show strength. That is divergence. All right? That is generally what divergence is. Okay, so go back to my picture. The one on the number 1 on the left, that is what? Bearish divergence, also known as negative divergence. Write that down, because when you study, different traders call different divergences a whole whackload of things. You will get confused, right? Number 1, the one on the left, look at all those arrows pointing down. Bearish divergence, negative divergence. Number 2, on the right, bullish divergence, positive divergence, okay? That's easy peasy. Right now is easy. Okay. Other things you need to notice is where are these lines drawn? You need to, this is something that when you draw your divergence lines to practice on bearish divergence, right? The one on the left, what happens? The lines you draw are connecting what? The swing highs. Is that swing highs? Look at where the line is drawn. It's connecting the top peaks. Right? That's just what I want you to notice. On the right, what's happening? It is connecting the swing lows. It's connecting the bottom. So is it possible that you go around and say, guys, I see bearish divergence and draw the lines incorrectly and nothing's happening, and you take the entry and you lose all your money? Yes. If you draw those lines incorrectly, you're going to read it wrong. Did you guys pay attention to that? You did? Okay. Okay. So let's talk about this one first. Just pay attention.
Hey, you fucking faggot. Okay. You're a fucking faggot. Inner heaven gang gang.
Hey, get the hell out of here with that.
Fuck you, you fucking faggot. Fuck all of you.
This one first.
Fuck you.
Who's that?
Fucking fuck you.
The mustache.
Who is that? That's okay. Now they're
Ban
on
mustache killer, please.
They're on YouTube.
Nigger.
Oh, we got no.
Okay, wait. Let's finish the class though. It's important here. Deal? Forget it. It's okay. Let's do this class. Okay. Regular divergence, negative. What's happening? Price is moving up, but the RSI is going down, right? If you notice that on any time frame, this will go down. Right? Look. Easy.
It's over, guys. Let's avoid flooding in chat.
It's okay. Who cares? It's not. It's focus on the class. Focus on the class. Okay, look, guys. Right? If price goes up, indicators goes down. It's going ahead of trend. The key word here is ahead of trend. This is telling you this is about to tank. Does that make sense? Do I need to show you an example of bearish divergence somewhere? I'll show you an example, but I don't. Okay. Okay, you could Google this yourself, right? Look at this. Look at this. Look at this. This does not match the picture up top. It matches it. It's telling you going ahead of trend. I know what's about to happen. Fair? Okay. Let's talk about exaggerated divergence. Actually, no. Let's talk about on this side. On this side. Right? What's happening here? Price continues to move downwards, but the indicator is showing increasing momentum. Right? Increasing momentum. Price keeps going down. Yeah, 5 people keep dumping every 10 minutes. So what? But there's so much more buyers coming through, trying to break resistance. This goes up. Make sense? Psychologically, does that make sense? Clear, right? Easy, that one. Those are easy. Those are the 2 easiest ones to remember. Okay? Now let's focus to this one. Okay? This is bottom 2. Let's breeze through this. Bottom 2. On the left, exaggerated divergent. What Exaggerated divergence. Where do we see that? Where do we see that? Wait, I will show you. Oh, wait, one sec. I will show you guys today. It showed up today. I have an example. I have an example. One, HMY tank, right? Right? I'll show you the example. You guys just have to believe me when I show you. Right? On the left, look at this. What is that? Look at the left pictures. Do they match? Does the left match my picture? I knew that this was going to tank, and it dropped, right? It dropped like 20. Distribution. This is distribution. On the left, it's distribution. On the right, it's what? Accumulation. On the right, the picture on the right is accumulation, right? Prices keep bouncing. Right? Do I have to show you? You guys trust me that on the right, you guys can visualize a picture. All right. I don't even know if these people know how to trade. One sec. I can't find a single example on the internet. Oh, yeah, here it is. All right. Here it is. Here it is. Okay? Shows just like this picture says, right? Look at this. Look at it on the right. Right? But what's happening here? Let's redraw this so we can. Why is it accumulating? Because, oops. Right? Look at that. Look at the lines. This is what? Look at the one on the right. Look at the picture. Look at this. Look, that is support and resistance. It's trading sideways in congestion. So we could use RSI because this is moving sideways, trading sideways. It works. This is accumulation, isn't it? They were buying at support. Eventually it broke out. How did we know? Because the RSI, the relative strength index, kept moving up. The momentum moved up, but the price kept staying the same. Prices were being held down here. Okay? Now you guys believe me now? There's exaggerated. Okay, so we went through 4 divergences really quick there. Yes, you guys might be confused now. But when you go back to do your homework and study the charts and look for RSI meticulously, you can predict these moves. Okay? Okay, let's talk about hidden divergence. Hidden divergence is probably the most confusing one of them all. All right, let's go on the left. It's the most confusing one of them all. But this is very important for these words. You're not, it's continuation, okay? The hidden divergence is showing up in continuation. It is continuation of weakness on the bearish side. So let's just talk about this really quick. Okay, this thing continues to tank downwards, okay? Look, the stock continues to tank downwards. Momentum comes back, but there's a key here. It doesn't break over resistance. So you might have to write that down for hidden divergence, okay? You might have to write down, this is continuation of weakness. So this hidden divergence idea for bearish, okay, so let's write this down because this is going to get confusing. Here, bearish hidden divergence is what? Weakness, continuous tanking, right? Continuous tanking, and the buyers are coming back. The indicator is showing strength, but not enough. So this will continue to tank. Is that clear? What I just said right there. Right here. Oh. Okay, so I do have an example with Archon. I pulled it up. I remember I posted it there. So I do have, wait one sec. I need to go back to Bloom Place. Okay. Okay, look. Here. Look at hidden divergence. This continues to tank downwards. The momentum. Look at my line at the bottom for an RSI. I'm showing strength. It did it bounce, and then go up again? It did. But what? Not enough. It could not break over what? It could not break over the counter trend line. It could not break over the counter trend line. Hence, Archon what? Continued to tank. That's important, isn't it? That's hidden divergence. It's very complicated. I hope you can understand that. Very confusing, but it's a continuation of weakness. If you can understand hidden divergence, everything else you would understand the other divergences. Okay, let's talk about exaggerated divergence. No, crap. No, not exaggerated. Sorry. Hidden divergence on the bullish side. Okay, based on the psychology of hidden divergence on the bearish side, what's happening here? This is a continuation of what? Upward momentum. Price continues to move upward, right? Right. Price continues to move upward. This is continuation of strength, isn't it? This is a continuation of strength. Continues to move upwards. How is it that the indicator is tanking here? The RSI, look. How is it the RSI is dropping? There's selling pressure. People want to dump their shares. But what's happening here? They're dumping their shares, but not enough people are dumping. That support is not broken. So the opposite of the other one. Hidden divergence on the bearish, it couldn't break resistance. Hidden divergence on the bullish side, it couldn't break support. It bounced off support, and it showed you on the indicator. It bounced off the RSI trend line, right? Look, here, let's look at this picture again. Here, it bounced off the trend line, actually. It bounced off the trend line, and it continues to move up. Is that clear there? I basically explained the 6 divergences in 15 minutes. That's impressive. If you guys understood it all. Does anyone at this point are confused as hell what I just said there? Just like I don't understand any of it. But let's take, okay, so I know where you're confused. Okay, here's the example again. What is divergence? Okay, what is divergence? Divergence is when price is going down, but the RSI keeps going up. Carlos, how is it the price continues to go down, but the momentum continues to go up? How is that possible? It's possible, isn't it? Why? It's possible because not a lot of people are dumping. Only 3 people dumped, causing the price to go down 20%. It's possible, right? If tomorrow I pick a stock, HMNY, sell 5 shares, market order at like $6, is it going to go to $6 really quick? Yeah, it probably will. It will. I'm dumping it through I'm sending the stock right through the bid, right? But is that going to make the RSI change? No, because the RSI is a mathematical formula, right? It's taking the average prices. One price on the tape does not change the RSI. So that's another thing. The RSI formula, right? The RSI formula. I'm not going to go through the formula because the RSI formula is actually the average up versus the average down. It's the average prices. So one guy can't do this. One small chat room can't change the RSI, but one small chat room can change the candlestick, can change the price action, right? Because one person can change the candlestick, but you need millions of traders to change the RSI indicator due to the formula. That's more intuitive stuff. You probably won't get what I just said there. That's fine. It's okay. Okay. I think that ends the topic. I think that ends the class. I did go through a lot of material. It is together, this class, last week's class, the first 4 weeks together should give you enough of a strategy for you to create a buy signal now. So here's an example of a buy signal. Okay, so if I notice that the stock is above the 20-day moving average, the short term, right? Volume is coming in at support. The RSI is trending upward. It's showing no divergence, right? Because remember, when you see divergence, something is up. There's something is about to happen here, right? Something scary. You don't want to be a part of it. But if there's no divergence, you can say, I could take an entry with a stop loss, right? I could take an entry now with a stop loss. That is my buy signal. Is that clear what I just said there? You have enough material at this point so that you trade tomorrow with us live. Oh, I see this trade idea. I see this technique. I see this. Does it match my buy signal? Am I taking the entry here? Do I have a stop loss just in case it doesn't work out? Because I watched the Mark Douglas videos already day one, and I learned that I can't predict the market anyways. Like at this point, before we go into volume analysis, you should have a good idea of a buy signal, a trading strategy, a technical method is what Mark Douglas calls it. Okay? So this class, I covered a lot of material. You need to go back onto YouTube now to just go over the terms I used. Bearish divergence, bullish divergence, moving averages, breakouts, whatever, and just YouTube it yourself now, right? I've gone through the confusing parts of those terms. Okay, so here's another misnomer in trading. You could use any combination of moving averages. So you could use 8. Okay, so I use the 8 EMA over the 20 MA. Okay, for swing trades, I use the 50 EMA over the 50 MA. You could use the 9 EMA over the 21 MA. Okay, so what's happening here? What's so important here? Let's take a step back. Okay, wait, here. Let's say I use a 20-day moving average and you use here. Let's take one step back. If I use a 20-day moving average and the 50-day moving average, am I going to be able to see your buy signal? Am I going to be able to see your entry? No, because I don't know. Your entry is over the 50 EMA. If I don't use that as that's that moving average, how can I see? How can I see why you're getting in? Does that make sense? If somebody's using the 8 EMA and someone's using the 9 EMA, the 13 EMA, like how can we see each other's entries? We can't. I'm not using your EMA. How can I see your entry? I can't. I don't know what it is. Is that so? So why is that important? Basically, it doesn't matter what pair you use. It doesn't matter. As long as you are able to have discipline and have a strategy on execution is more important. Every time the EMA crosses over the 20 MA at support, I take my entry. Every time it breaks down, the EMA is broken, I exit. That's it. Who cares? Who cares what the EMA is? Who cares what it is? Who cares what it is, right? It doesn't matter what it is. As long as you follow your strategy, it will be consistent. If you trade the 10 EMA, you will be trading against everybody on the planet that's trading the 10 EMA. If you make money trading the 10 EMA, you are saying you are making money on people who are trading the 10 EMA. That's what you're basically saying. Is that clear how this is working? It doesn't matter what you're so that's the first thing I learned too. I'm like, okay, so I first followed this one other guy, used the RSI 12, RSI 11, and the EMA MACD. I copied him, and then I found out that was his strategy. Okay, so you guys will have to come up with your own strategy, your own pairing. Okay, tell me. Okay, can TJ show the vote? Let's see who got really lost on the divergent stuff. The moving average stuff you guys can get, the RSI stuff you can get, but the divergent stuff could be really confusing. And if you apply it wrong, you could go the other way. Like you could be losing money. But as a tool for predicting the price movement next, the predicting price action, it's very important. It's a leading indicator, right? One sec here. Do we do this a lot? So let's just use Francis' picture real quick because I did ask you guys to watch the RSI trendline video by Frank Paul. So let's just really what the, one sec. Okay, so we didn't go over it today, really. Okay, look. Here, see how Francis is drawing that trend line at the bottom there? He's drawing the trend line, and once that trend line broke, right? Once that trend line broke, actually, Francis, you drew this line wrong. Okay, so, because look what he's drawing here. It broke, yet resistance is not breaking. That can't be. He drew this line wrong. Okay, so forget that picture. Oh, God. Never mind. I probably confused you. Okay, let's delete that picture. Okay, so watch the RSI trendline video by Frank Paul again for homework and learn to draw those trend lines like him. It does predict future price action. In that particular video, you will notice that when the trend line, RSI trend line, is broken, the price action broke right after. Okay, when you watch that video again, think about this. The RSI is using averages of price to get the RSI. Okay, the formula is average up over average down times some index to make it, or right, whatever. That's why the RSI, when it breaks first, price action will follow, because price action can actually be manipulated, right? Because the candle, if tomorrow I jump in HMNY and put in a buy order, like let's say, for example, if HMNY opens at 10, Superbloom comes in and buys 500 shares at $12. What's the candlestick going to show? The candlestick is going to show like a rip to $12, right? It's going to show that, but the RSI won't. The RSI is using averages. If there's not enough to move the average, the RSI can't move. That's how that video works. Frank Paul. So it's on the right there. And okay. So that's why when you see RSI, when you see the RSI break first, price action will have to follow, because RSI cannot technically be, here's the homework, technically cannot be manipulated, but price action, the candlestick can. Okay? Okay, do we have questions here?
Hey, Bloom, I have a question or a comment. Thank you for all of this. So if we are able to identify the divergence, the convergence, have the SMAs, the EMAs in place, is that all we need in order to know where the stock's going for sure?
Whoa. Okay, remember, this is the thing about indicators and divergence, okay? These are leading. Okay, so let's take one step back. So the indicators, when they cross, when you get your buy signal, at that moment in time, your buy signal is telling you to take your entry, right? But the 1 minute after that, nobody on earth will know what will happen. No one knows what will happen next, right? Is that true? It will tell you, like, here, do I have a accumulation? One sec. Did I answer that right? Because there's okay, wait, one sec. That's a very good question. You do, okay, so it's called edge, right? It's called edge. It's like you're looking for a setup that you know, your buy signal that you know, that will give you a high probability chance that it will go up. Is that fair? It's going to give you let's say it gives you a 80% probability chance that it will go up. 80%, right? That means out of 1,000 times, 800 will go up. 800 will go up. This is in the Mark Douglas videos. 800 of them will go up, correct? 200 of them will tank. But sadly enough, we don't know which. We don't know the sequence, is what Mark Douglas is telling us. We get our setup, yes. Superbloom taught me exaggerated divergence, right? Look, let's go back here, because this is going to be in the volume analysis stuff. So I'll plant the seed here, actually. Okay, this is accumulation. Okay, look at this. Let's study this really quick. Okay, this is what I'm studying. Look at this. This here, this exaggerated divergence here is like, look at the price. It's trading sideways. Momentum is increasing. It's trading sideways. Momentum is increasing. This is accumulation. This is ready to break out. But does it guarantee that this will break out for sure? No, it doesn't guarantee me that. It doesn't. It just tells me this is about to happen that way, right? It needs follow through. It needs more buyers. It needs a lot of things to happen. It needs a hedge fund guy in New York to buy it as well. It doesn't guarantee you. Just like the Mark Douglas videos, you guys have to watch that video number 1. Okay? Oh. Actually, here, I'll do, this is for homework 2. Actually, you know what? Do this one for homework 2 for 2 weeks from now. Because in the video, he tells you. In the video, he tells you this. He tells you this. You know your setup. You take your entry, but you don't know which will make you money and which will not make you money. So you just don't know. All right? Does that answer your question? Discipline?
Yes.
It does, right? You get your signal.
Yes.
You get your EMA 8 just crossed over your 20 MA. Yes, the momentum that has signaled a change. The momentum is now increasing. But as you know, we could take the entry and what happens? False breakout, right?
Yep,
right?
Yep.
We know that. Like how there's no way to predict a false breakout. Why? Because there's no way to predict who on the other end is going to dump. No, we don't know that. Okay?
Yeah, I was trying to put things in perspective for everybody. Everything that Bloom is saying is 100% correct, but it still doesn't say that we know where the stock is going to go. That's all I was trying to say.
Yes, it only gives us a general, like an idea, a probability setup. It gives you the edge, gives you your buy signal. Take the entry. After you take the entry, nobody on earth can tell you what's going to happen. But these are tools that you can use. Volume price analysis, candlestick analysis, and the divergence. You can combine those tools and you can see how accurate. I'm very accurate when I'm predicting. When I take my entry, I'm almost like 100% the stock's going up. What happens to me later is what? It trades sideways, it goes up, it goes down, I get impatient. That's all emotional after. That's another point. Your buy signal, you can master. You can master your entry. No problem. Every time you take entry, green. But for some reason, you're always losing money. Why? Because after you take your entry, it's unpredictable now. You don't have a buy signal. You don't have anything. You just have your emotions. I'm up $2,000. I'm down $500. It's up to you now. It's your emotions. Nobody can teach you what's going to happen after the buy signal. After you take your entry, it's all on you. It's all the discipline. It's all mastering your own technique. It's all doing like mental work, the mental focus from the Mark Douglas videos. Okay? Okay, what else? Does anybody else have anything good to say? Or here's your chance to comment before we break for a week or something. Let's see that question here. Paula, did you find that the divergence stuff confusing a little bit? I just want to know because it could get very confusing. Where is that candle? Where is that question I saw? Oak? It went away. Okay, here it is. So can you say that if RSI is falling and about halfway down it turned around, goes back up? What's your thoughts? I have no idea what that means. If RSI is an indicator of momentum, okay? If RSI is moving upwards and price action is moving upwards, it matches. This matches. Or momentum and the RSI is validating the price action. If you look at the volume will be increasing too. Volume validates price. RSI validates price action. This is going up, okay? If RSI tanks downwards, price action should also be tanking downwards, okay? Volume should also be decreasing. If you see the three layers between them, there's something different. RSI is going down, price is going up, volume is going up. There's something going wrong here. There's something weird going on here. Did I study divergence properly? Right? RSI can go up and down. Halfway doesn't matter. Right? It's hard to see hidden divergence. Let's see if I posted it somewhere. That one day, I think TJ was trading what? It showed up, right? Let me look. Wait, here. if you guys have some time, let me look on the internet if there's RSI divergence here, and I can explain it. Here it is, okay? Here it is. Here's a really good example of hidden divergence right here. Here it is. This thing is moving upwards. This is a continuation of strength. Remember that. I put it in the notes. Oh, oops, wrong page. Oops. I'm in trading floor. One sec. I have to go back. No wonder. Oops. Okay, going back. Okay, look. Here. Look what's happening. Bullish hidden divergence. This is moving upwards. This is bullish. So it's moving upwards. Look at the counter trend line. Look at that red line. It's the counter trend line. That's the counter trend line support line, isn't it? Okay? Look at the stochastic. In this case, it's an oscillator. Pretend it's an RSI, okay? RSI, stochastic, MACD, they're all considered oscillators, okay? So forget that it's stochastic. Just pretend it's the RSI. What's the RSI doing? The momentum is tanking. RSI is tanking, but their selling pressure is increasing, right? Downward selling pressure causing the RSI to drop, but not enough to break the counter trend line. It's not enough to break the counter trend line. That's why it has to go up. The support there is actually too strong. Is that clear? That's so clear. Even I understood what I just said. That means a lot. I have no idea. Sometimes I have no idea what I'm saying. Okay, get it? Yeah, get it? It will take practice. You will have to look at multiple charts, go in the room and say, hi, Messiah, the swing god. I drew this picture. Can you help me? Is that right? This will take some time to soak up. It took me the intuition behind divergence. But once I learned it, I can spot it and I know something's up and I don't take an entry. It's too scary now. It's too scary to take an entry, remember. Because if you see, remember, this is probably what we need to know together as a team. Okay, so let's, before we break for summer break, yeah, it's summer. Okay, let's just wait, oops. Let's just really focus on this one. Well, you should focus on all of them. But what is this one? This is what? This shows up a lot, right? This one, where does it show up? Where does it show up? We talked about this. Distribution. This is at the top of the freaking channel. This is about to tank. Right? Distribution trading. Right? Where is it? Right? Just like the picture. Okay, actually here. Look at this. Look at the intuition here. Look at this. Look at this. Look at this. Look at the distribution. Look at that volume coming. Look at this picture. I've just found this on the internet. Look at it. What's happening? Distribution, right? Just like the picture. Look at the volume. It's increasing in selling pressure. What do you think the RSI is doing now? What is the RSI doing here? The RSI is dropping, just like the picture. Distribution. That's why it's like distribution. Teachers like distribution, right? Right. I'm gonna go back and. Is that good? Over. Okay, so
Superbloom, I got one question. Okay, that was distribution. So what is the other exaggerated divergence next to it going up?
Okay, so yeah, exaggerated divergence is a key. Actually, okay, you won't know. We'll go through it in the volume, but this is accumulation. Okay, look at the volume now. Look at the volume coming in at the end. Okay, look at the picture now. Accumulation, right? This is exaggerated divergence, accumulation, right? Look at the volume coming in at the end. What is the RSI doing here if the volume is increasing? The momentum is increasing, right? The momentum is increasing, just like the picture. Like, I know, you guys are thinking like, what is he on? No, it is. It's true. I don't need him to look. Look what's happening. The RSI has to increase because volume is increasing. Support is held there. Does that make sense now? Does that make sense? This is why am I teaching this class now? Because in the volume analysis book, she goes through accumulation and distribution. And one way to figure out that it is about to break is to figure out if the relative strength is increasing or decreasing. Okay? Understood? So when you do your homework, you ask yourself, when I'm looking at a chart, is the RSI, is momentum increasing here? Am I drawing my support resistance lines? All right? The more I talk, the more I feel like I'm confusing everyone. That's the truth.
No, you're doing great, man.
OPV trending downward, I actually don't know how to use that. But if the price is trading sideways and you have RSI trending upwards, God, isn't that this picture? That's, guys, this is this picture. You either, isn't this the question you asked me? This is this picture, isn't it? This is that picture. Price is trading sideways, but the indicator is going up. Is it not? Okay, so that's a good question. Okay, I wanted you to be cognizant to take an entry. Okay, TJ or Discipline or Vegas or me, we make it look easy. Okay, but we are putting multiple strategies together. We're looking at the tape, the level 2, the moving averages, the volume. We're looking at multiple things. We're looking at support and resistance mainly too for entry. We're looking at 5 or 6 different things for entry. And sometimes I'm cheating. TJ, did you take entry? He said, yeah, I'm just going to take an entry because I already know he already did his analysis. I'm jumping in. I'm cheating, right? So your question is, so one more question. You mentioned when price action crosses over, it's not a sign of entry. That alone is not a sign of entry. No way, Jose. Because price action can move over moving average. But if you are right in the middle, congestion, what happens? If you're trading in congestion, is it possible that this happens in congestion? Yes. If it happens in congestion, are you going to buy it? No. You just can't. Remember, we talked about this. We talked about this last week. We talked about a congestion. All right? We can't trade in congestion. Can this happen in congestion? Yes, it can. Does it? Yes. Okay. TJ, do you have any comments or anything at this point?
No, I think you covered everything. Unless anyone else has any more questions.
Because
I think a lot of people need to see it in action. So, in the next couple of weeks, when you're looking at a chart, use the RSI and try and find the divergence and the breaks on it.
Okay, look at this. Okay, here. I'm cheating a little because I know this chart. Okay, I'll show you really quick. Here's the support line. Here, I'm drawing one for now. Okay, I don't have a position in DEST anymore because I panic sold. All right? I panic sold. Okay. 1 second. Okay, this is how you would set it up. And wait, 1 second. Right? On the 19th. Here's what's important. Okay, let's study this really quick. Okay, look. Is this what the exaggerated divergence is on the bullish side? This is what it is over resistance at support. Look at what RSI is doing. It's trending upwards, just like the picture. Is it not? Yes, it is. Look at the volume at the bottom. Look at the volume. I didn't want to ruin the surprise, right? Because that's cheating. I don't even need to know look at the volume. Let's study the volume quickly. What's happening? There's more buyers than sellers there. The selling pressure is running out. This can only go up. Is that right? Am I pointing this out? Like, am I cheating here? Did I make this chart up myself on Paint? No, the selling pressure is gone. I can see it. Okay, right? Okay, what's that red arrow that I'm drawing there? What's that red arrow that I'm drawing there? No, what the hell? That red arrow is the moving average crossover, right? EMA is crossing over the 20-day moving average, right? That's showing that momentum is increasing. That's what it is changing. The sentiment has changed there. But you could take an entry there. But look at your entry. You're right in the middle of what? Congestion. Are you going to buy a stock in the middle of congestion? No. And if you have to ask me why, you have to go back and study. All right? Is that clear, that picture? That picture is clear. I like that picture. It shows exaggerated divergence. It shows the buyers. It shows the volume increasing. It shows the accumulation, right, before the breakout. And we studied that chart last week. It's a good chart. All right? Relative volume, the higher the general rule, the higher the relative volume, the better. More buyers. Okay, sorry, I was yelling at the end because I was passionate. Some people might call it anger, but I just call it passion, you know?
It's passion.
All right, I hope that clears it up. I mean, at another point, somebody else could teach divergence, but you guys know from here, we have the video now. Somebody else can come on and say, okay, guys, I think I know hidden divergence. I hear some examples and teach each other. Are we not supposed to be a leading institution? God. All right, I'm out of here. No more questions?
Thank you so much, Bloom.
Yeah, no worries. I don't mind. It was fun. Okay?
And to answer you guys' questions about the OBV and the RSI, they're two different formulas. They have two different purposes. When the formulation is different, the divergence is going to be kind of like the opposite.
But before I go, that is not to say that when you take an entry, you always have a stop loss. Always. No matter what. There's no way you can predict the future. After you take the entry, nothing can help you.
Like, you have to predetermine your stops. You know, you have to know where your target is, and you have to know where your stops is. This is part of trading. You cannot have one without the other.
Yeah. Okay, so see everyone tomorrow. Please pay attention when I post my charts. Just before I go here, when I post my charts, I would usually post the RSI and TJ too. TJ is using RSI trend analysis from the Frank Paul videos, right? And I will use that as well, and Gabe will use that as well, because we all know that this is the leading indicator of direction and momentum of everything. It's just leading. We think we know what's about to come, okay? We think we know. All right? Okay, I'm out of here.